All right, so today is, I don't even know what day it is. Day 11? Oh, look at all those notes from yesterday. Day 11. And it would be, I don't even give a shit. Personal concepts. Cool deal. Personal concepts are basically things that I have come up with over the years that I think can be relatively useful, which I should have them somewhere. Yeah. So let me grab these so I can remember. And there's probably a couple more. Okay. So, if you've traded with me, which I know you have, ABC, then you probably have already heard about a couple of these. Morning drive, trench warfare, refuel move, right? And they probably all have different names and like literal things. I don't really know what they are. Never went and done the research. So these are more of just little things that I've come up with. Pretty easy day. So morning drive. It's probably one of my more liked concepts. So when you see that there's no morning drive within the first like 15 to 30 minutes of market open, it typically means the day is going to be consolidating, right? Consistent of bullshit. Versus days when you see that you do have a morning drive, you typically get some volume and have some type of move. Okay. There are exceptions to this. There are absolutely exceptions to this. Fridays. Okay. Fridays are notorious for having a nice move and then nada. Like literally nothing else for the rest of the day. Alright, last Friday was a prime example. Great downside move. Sat sideways for the rest of the day until close. Okay. Not seeing a morning drive is something that you absolutely should be taking note of so that if you do execute another trade in that day, you can understand that, maybe I shouldn't be greedy and like have my hopes and dreams up. Just not seeing a morning drive alone, I wouldn't go, okay, I'm no longer trading today because there's potentially still opportunities. But if you don't see one, it's just like, what in the world are we doing? It's going to be a rangy day. Something like this right here. Right? Very, very small morning drive. 200 points versus something like 400 points. Okay. And we've actually been pretty good about this lately, I'm not going to lie. There's a no morning drive day. We just open up, drop, pop right back up. It's just a lack of direction in the mornings. Can sometimes anticipate nothing. The exceptions are being Friday. The exceptions are if there's red folder news coming out at 10 a.m., 9:45, right? Sometimes we'll see the market consolidate until that early morning news comes out, and that ends up resulting in the morning drive as anticipation. Morning drives are really good. Just first thing in the morning, keep note of it. Understand that, okay, hey, no morning drive today might be choppy, right? So absolutely something I would just keep in the back of your mind. Now you want to go and smash my TPs, don't you? You freaking bastard. The other thing, were we using this chart? I think we were. We're gonna use this one. Okay, so let's go back in the notes. Morning drive. If you see a lackluster first move when market opens can mean that the day will be range bound / choppy. Exception being Fridays, early morning, put in parentheses, 15 to 30 minutes after open, red folder. And then shit, just news in general. Trump. Oh, there you go. So I mean, yeah, if news comes out, it has the nuts and the poker hand, so it will invalidate everything, including, you know, all the concepts we're gonna go over. It kind of invalidates damn near everything we've gone over in general. So instead of that, I'm just gonna put news, midday news, random news. That's what I'll put. Okay. So those are exceptions. Things can still happen. It's more of just like take a note of, quote, take note of, and then maybe like not a certainty. Okay, trench warfare. It's actually my favorite one. Trench warfare, we're going to use supply and demand to show kind of what this is. Okay. And we kind of hinted at this the other day going over all of this, so we're going to use Tuesday as an example. When we were up here in this range, we truly only had, we were battling between buyers and sellers, right? So you had sellers up here and buyers up here. These are the sellers, or the buyer's trench and the seller's trench. And they're shooting down no man's land. Okay. They're simply sitting here battling each other until one side can take over the opposing trench. Right. In this case, sellers took over buyer's trench and made this their new trench. Then it comes down into here. Right. We're down here. Sellers are trying to make a progression. Buyers kind of shoot back, wasn't enough, bam, we drop, right? So seeing this, it just makes it very clear, but you can also see it intraday and on very low or high time frames. So if we look, it's basically just supply and demand in an interesting way of thinking about it. Right here, we can see we have sellers trying to defend their base, but we have buyers trying to defend their base here. Okay. A lot of the times when you see this, you'll just bounce back and forth and create a chop. Okay. What you want to do is not participate, as we went over, I believe yesterday, maybe the day before, supply and demand video. You don't want to participate. Okay, you don't. You'd rather stay away from stuff like this. It happens on all time frames, so if we go to the 5 minute, I don't know for a fact, but we could be seeing trench warfare up here. We could be holding this with the buyers and this with the sellers. Okay. There is an extended part to this. So let's just look through today real quick. Hindsight 2020. But we come down here, we can see buying territory. I'm just not gonna change color. You can understand it. Selling territory. Okay. As we start to progress forward, the sellers do retreat. Buyers will progress. Right? You can read pretty much where they sit based on the wicks. So we can see buying pressure was all right here by these wicks. Then they moved here and then here. And we can see it still gets defended in this range. And for a little while, we had sellers kick our ass. But this entire no man's land right here is full of buyers. So until we truly break down into the other trench or reclaim with a true hold under, we can kind of predict some upside, right? We need to understand that buyers still technically have control. And then likewise, you know, we had sellers retreating the entire way. Sellers were previously all up in this wick high. They moved here, right here. Look, we had some past trench warfare. Look at kind of what happened when we got up into this range. We really got into a boxing match. Buyers took control. We can see we had past sellers. sold off back into where buyers were, and progress forward as we reapproach where sellers used to were. We can see we found a little bit of a hiccup, completely took it over, progress forward. And as you can see, we just continued to have sellers retreat and retreat and retreat, and they never won. All day. All day, buyers won, and in my opinion, are still possibly winning. Because here's where the buyers are, give or take this range, okay? And look at where we're holding. It goes back to the high time frame of, you know, buyers or sellers be here, and this is no man's land. Yeah, it basically is. It's just an easy way to understand supply and demand. It's very, very similar to supply and demand. But a lot of people will look at supply and demand and try to get in on trades in no man's land. And it's not what you need to be doing, okay? Why would you, if we know that buyers are here and sellers are here, you want to be with your team, okay? So if you are biased to the upside or want a long, then you need to be entering where buyers are. If you want to be short, you need to enter where sellers are to be with your team. You don't want to be, you know, that strangler that's shorting right here when your team is way up here, right? It doesn't make any sense. So you have to, I always found it easy to think about as like, you know, don't play in no man's land, okay? If you don't know what no man's land is, then go look up World War I or trench warfare, just in general. You'll understand. You battle between the two trenches, and then you progress through no man's land to try and move your fronts forward. It's the same thing in the market, okay? It is literally pretty much identical thing to the market. I wonder if I should move that level or minimize it. Because right here looks to be the spot, low key. Just looking at it real quick. I'm gonna wait to see how this retest forms. So just easy to think about. Try not to be in the middle of no man's land. Right. The other thing you can do is, let's say we have buyers and sellers here. Right. I did this with supply and demand. You don't really want to be in the middle. Okay. You want to be on your side of no man's land. Really that simple. Okay. And you also don't want to front run it because you never know how strong your sellers are. Right. Just something to think about. A new way to like approach market. Trench warfare. Pretty much supply and demand. Okay. Stay out of no man's land. Seriously. What else did I want to put in the notes? Make sure you are entering with your quote team. Okay. It's gonna help you. Yeah, I mean, it's basically just supply and demand. I think we can leave it at that. It's just simply another way to look at it. Refuel move. Okay. Also pretty much supply and demand. What a day, man. Okay, refuel move. Find a decent example. You can use this on any time frame. So, coming into this with no context, other than what I tell you, we can see sellers were in control. We were based aka, you know, the trench for the sellers, were basically right there. But we couldn't get enough troops to break through the lows. Okay, we ran out of gas. We ran out of sellers to continue to break low. We created a higher high. We come back and hold the same spot. Okay, creating this first higher high in this example is what was the attempt of, oh, let's go find more sellers to break that level. When we could not break that level, you can typically expect a higher move to happen in hopes of more sellers to be picked up to push us through. Okay. We can also see this. Let me send this text real quick. Right, we can see right here. So we didn't have enough sellers to push through these buyers. Okay. So what happened is we picked them up and we tried and it failed. We came higher, they won and pushed us down. Okay. When you see something like that, where you make an attempt to grab more of your quote teammates and then you still cannot, we will typically make a different direction. We will need to retrace to regroup, right? And once again, today is more of just things to have in your arsenal of understanding. Let me see if I can find another example. Let's go to 5 minutes. So we were battling between here, buyers and sellers. Okay. Buyers clearly did not have enough juice. We regroup, try again. Regroup, see how we created lower lows? Okay, we tried to pick up as many buyers as possible. Look, buyers were previously here. Failed to make an attempt, even up to it. In this moment, you can expect that buyers are going to want to regroup, comes back, tries to pick them up, and we still fail. At this point, you're kind of cooked, and that's why we formed some downside based on the refill move. Okay, forgetting everything else for right now. So let me draw this out. If we are consolidating, aka battling, okay, and we're trying to go higher, maybe we're in an uptrend, right? And buyers cannot break through these highs. Sometimes you'll see us dip lower, grab the liquidity, whatever you want to call it at this time, to make it a press higher. If we fail again at the rough same spot, you're bound to go even lower than this past refuel. Because at that point, there was still not enough buyers to get through the highs. So we have to go back and pick them up. To the downside, or for sellers, that would look like, you know, say you're coming out of a downtrend and we start to consolidate. Okay, we battling. We try it to make a little bit higher to grab more sellers. Still cannot break. Okay, we're probably going to go higher to try and regroup to then break through, right? This is your refuel move right there. Okay. Does this make any sense to you guys? Yep. Cool deal. Okay. So let me see if I can find one more example. Bullish or bearish. And this goes on all time frames. Okay, this isn't limited to 1 minute, 5 minute. I mean, it just will be a little different. So you gotta find some consolidation. There we go. This one. That's rough price action. November? Oh, early December. Yeah, that sounds about right. That is rough price action. Holy shit. All of this. Good gosh. What the fuck even is this? I don't know where I was during this. This is nasty. Sellers are here, buyers are here. We cannot break through these highs. Sellers are progressing, failed, right? Because we moved lower. Could not make it. Tried to refuel there. Still could not. Went down again. Came higher. Picked them back up, right? We didn't go any lower here. Failed it again, okay? It's like double top. And then we finally just gave up. Okay, sellers were too strong. They're whipping our ass. It's uneven. It's just not a fair match, right? Buyers are defending. Sellers are trying to push us through. Come down. Still cannot break. Refuel. Still cannot break. Refuel. Still cannot break. And then just, you know, we took control. I mean, sellers just win. And then you break down. Right? It's like a sign to see which side is going to win, right? It's not a certainty, so you don't want to just solely trade on it. But this will come in handy when you're reading intraday price action. Intraday price action will make a little bit more sense. Okay. For example, let's say we're trying to break through these relative lows. Come down, can't break it. We refill past this high, break down. Okay. This is just a off the dome example. Okay. Trying to break lower. We cannot. Can't find enough buyers or sellers there. We go higher. Try and, you know, regroup and grab as many as possible up here. Okay. And then go lower. If we hadn't broken down, let's say we held, we would have probably gone and even taken out these highs in hopes to grab more sellers. Plus, buyers are fully in control. They exhaust the sellers. Okay. That makes some sense though. Cool deal. So, refuel move. Found when price is choppy. Okay. It is sellers / buyers regrouping in hopes to break a new break a level. All right. If we quote refuel and still do not have enough sellers / buyers, depending on trend or direction, we will make a higher / lower move compared to the last quote regroup. Okay. Does that make sense, that line right there? It doesn't, then I'll reword it. It's really not like some rocket science learning strategy. It's just helping understand. Understood. Awesome. Failed. I think hoorah is spelled like this. Okay. Failed hoorah. This is a little more of something you can actually use to take a trade. Let's go to last week. So we see a fair value gap in here, right? This is paired with the strategy that we've been learning. See a new fair value gap even within this one. Let's say we're narrowing it down. Go to 1 minute. Okay. If you are trying to look for an entry, you don't have a structure for, you know, break of structure or anything. See if I can hit it. No, is there not an example right here? Okay, that's kind of a failed hoorah. Price comes up, fails, and breaks lower. So let me see something. I might be able to show you guys this live. Maybe not. Do this. Grab this. I'm not gonna lie, Top Step really can make it clean. 1 minute. So right here, if you watch this price action, you can see right now buyers are trying to take control, right? They're pushing higher, and I have no idea if this is actually going to be a failed hoorah. Okay, so bear with right there. So look, you see price starts to get pretty weak. We're getting smacked down. Okay, you want the candle to close. Honestly, like I can't predict the exact future, and there's no like replay mode like this. So it's, you got to kind of watch it real time. If this candle flips red or even like creates a hammer candle and closes way down here, that's what I would consider a failed hoorah. Right? And we got 4 seconds left. 3, 2, 1. It's kind of a failed hoorah. But again, it's going to be best paired with another entry. Right? It signifies basically that buyers are trying to push, get exhausted, sellers want to take control. Okay. I have no idea where we are in the market, no idea what we're near, no idea if this will even continue in a downtrend, context wise. But it's like if you have an entry, you know, fair value gap or whatever, and you're like, this is a point I want to be interested in entering. I just want an extra confluence. Seeing a failed hoorah like this, let's say you're looking short, inside of a fair value gap, inside of an order block, equilibrium, or whatever, you can use that as an extra confluence. It's going to be hard for me to like show it to you. So let me, I was about to say, is that really where we are? Because I'm about to go down. See if I can find a failed hoorah. So right here, this is something. Came up here, swept out all of this inside of a 5-minute fair value gap. Right, we're inside of this 5-minute fair value gap, still valid, and we're forming all of this liquidity up here. Okay. You can also look at it as refuel move, can't go lower. These aren't high enough for sellers to pick up. Come out, grab liquidity. So this candle open, juiced, bam. It basically shot right back down. There's a confluence for you to enter, right? If you already have X amount of other confluences. This can help you use like last minute entries or whatever. So same kind of thing right here. Let's say you're looking at this fair value gap to be short off of. Okay. If you see price, ideally you want more confluences here. Price comes down, we open up, come up higher, slam right back down. We basically got hammered over the head and you black out. It's an extra confluence that, okay, sellers are trying to take control in your point of interest. Okay, let's go see if we can find a buying example. Say it's not the greatest example. We come down into it, we open, come down, spike. Okay, or right here, you come down into it, instant back up. This would signify that you clearly have buyers down here or here to stay. Right? Of course, it's dependent on how the price action actually moves too. Okay, using past like printed candles is going to be a little more difficult. For example, right here, come down into it. Let's say hypothetically we open, drop into it, pretty instant pop back higher is signifying that buyers would be present. Okay, watching it in real time is going to be one of the greatest ways to do this. it just pairs once again with other stuff. So let's see if I can find you another example of like a decent setup. I just wonder if my OBS is picking up my music and I'm gonna get copyrighted. I don't think it is. Hopefully not. Liquidity sweep. Okay. See if we can really break this all the way down. Five-minute liquidity sweep. Impulse move higher. Left behind. Fair value gap. Drop time frame. See what this next candle does. We're straight up. Because this is kind of an impulse move, or the failed hoorah. Now, not the best example because we opened up here, came all the way down. You typically want it to be relatively close. Where price just basically instantly gets rejected out of. It just signifies that like, hey, I don't want to be here, right? And price will then turn around and move. Does that make some sense? To either of you guys? Yep, cool deal. Failed hoorah. Intra minute. God. Confirmation. Okay. Always want to pair with a setup, not confluences, with a setup. Okay. Like you just have to. Okay, you don't want to just enter off of a failed hoorah. You want it to be pulled up. So if we were to do an example, it would be looking for a pullback to FEG, building block. Price moves higher into it. And let's just say we're looking for a short. God, I'm so biased short. Price moves higher into it and instantly gets rejected on the X time frame candle. AKA price does not want to be in there. Okay. Shows, because now we're no longer in the example, shows that your point of interest is a good point of interest. Okay. Extra and last confirmation before entry. Do not trade this on its own. Okay. Should result in a hammer-like candle. Okay. Dom can help read this as well. I feel like I need to go over the DOM as well. Okay, so open top step back up on the blown eval, and I want you guys to watch this DOM right here. Okay, my advice to you: don't only watch the ones placement. Okay, only watch the ones in the sense, right? So 1.5, whatever. Okay. Now, you do have to have somewhat of an understanding of what price is doing. So, right there, we can watch to see. It looked like 50 to 51 was full of buyers. So, when we pull back to 1 point whatever, you're looking to see if price will get defended, if the DOM will want to reject off of it. Okay. you can see still 1.5 to 1.0 is full of it, while sellers look to be around 4.0 to 5. Okay. So in this moment, you can, this is like nitty and gritty ass shit. But then you watch it. So look, we broke under that 1.5. Are we going to try and defend it? Yep. So in this moment, and it gets like OD as fuck, and you will kill your mental, you know, your mental energy and mental capacity doing this nonstop. But you can start to kind of see where buyers and sellers are present based on that DOM. Right. And typically, if you slide below where buyers are, sellers are trying to take control, and everything kind of resets. Which low-key, looking at this could potentially even be a refuel move. Trying to break here, didn't have the juice, come back higher, bam, bam. I wonder if we're going to come back down here and retest it. Okay. Using the DOM, I don't recommend you using it over X amount of space. This is intra-candle shit. Okay. So if you are looking for that failed hoorah, looking for that whatever, right? That's when you can start to use the DOM and other stuff. So 50.1 is right there, look to be where the sellers are. So let's see if we can get back above it. And if we clear 50.1, maybe we move up to 55, 54, where they previously were, right? If we can't, we're probably going to slide lower again because sellers are taking control and there's not enough buyers, right? Refuel move. It's just kind of frameworks. Mental frameworks is really what today can be. You can still see 50.1 or 1.5 right there at 51.5. There's your attempt at breaking it and instantly could not. So that's a failed hoorah. Hypothetically, make sure this is an eval, blown eval. You could try and enter it, and then, and this is just the dumbest trade in the world, right? There's no confluence here, no fair value gap, no liquidity sweep, no whatever. But then if I see us break above like 55, you can close the trade. Now, to set it though, being this close, you got to keep in mind slippage. So like 56, 57 would want to be kind of your stop, because if we do, and look right there, we're already back above that 1.5. So we're probably not going to move higher. All right. Again, this is not entered as, and this is a blown ass combine. So, but this is not used for setups in a sense. This is used for confirmation, for reading the hoorah candles, and all that fun nonsense. So let's go back to those notes. Does that make sense though? A DOM is a little insane, and that's where I don't really want to do a whole video on it, and it's not necessary, but it is kind of helpful when looking for that failed hoorah. So off of that explanation, does that make any sense? ABC DOMs? It's your little name is Dom. Like ABC has a question, so let him type it up. Yeah. Yeah, I mean it's very, very OD. Wow, did price really just pop that high? Or am I, oh yeah, I'm just zoomed out. But yeah, so DOM used with failed hoorahs, right? Want to use this only when looking to enter on that candle area, right? So like that candle, maybe the next one, maybe the other one, right? Within like a 5-minute period. Okay. Not necessary, which I don't know how to spell. No, that's fuck it, you can figure it out. Necessary. Not needed. Okay. This is simply overkill. It really is. Okay. So don't trade, and yeah, let me make sure that's clarified as well. Do not trade just using the DOM. You would be absurd. And then yeah, that's pretty much it. What other concepts do I want to go over? I'll share one more concept with you guys. And this kind of is hypocritical to a lot of what we've already learned, but I don't even know what I would call this. And this is more of a new thing. I'm gonna call it like entry structure. Okay. Why is my brain like just dying right now? Entry structure. Okay. And I'm gonna have to draw this out. So, and these are what I would like rate like B minus C rated setups. Okay. But I think you should know this as far as like the structure goes, and how you enter things. So, as we know, an ideal setup is like, let's just create some liquidity sweep, impulse move, retracement to some type of building block, and go lower, right? Say we got a fair value gap in here, and we get the liquidity sweep up in there. All right. I'll make this even a little better. That's an ideal setup. And you target, you know, whatever. Sometimes shit ain't perfect. Long story short, shit ain't always perfect. So sometimes you just got some random crap going on. No liquidity sweep, but we still can come up. And there might not even be a building block. Okay. You typically will find these first thing in the morning with the morning drive or pre. So let's say this is like pre-market. Let me say like this is pre-market. Okay. Technically, we take out pre-market highs. We do grab all of this liquidity. Have this crazy move higher. If you start to see price retrace and maybe like get a little slower or a little hiccup here, sometimes you'll see that end up being it. And there's no fucking building block in there. Okay. Now, again, you do not want to trade solely based on this. These are low quality setups. Okay. But I do want you to understand that sometimes you will see just like price come, you know, down, whatever, retrace, bam, and there's no liquidity sweep, there's no fair value gap, there's no order block. Well, I mean, potentially an order block sometimes at the lows. It's just like random price movement that I have noticed to be it. So, for example, let's go to the 5 minute. I'm pretty sure it's there on the 5 minute. Where the hell is day open? Right here. This was the ideal short. We wanted to pop in there. Well, I wanted it to pop in there to look for a short. Never did. Even if we look at this, the 1 minute fair value gap never actually got it. Came down, had a little retracement, sold off. Same thing, you know, we curved higher, almost trying as if there was a fair value gap there, it would make it a good setup, right? Let's go look at yesterday's morning drive, see if there's another example of this. Actually, just a perfect fucking example, right? So we see, oh, that's not even market open. Market open. Never mind. Just what the fuck is this? This is better, but that's besides the point. Let's go to the next day or the day before. 9:30. We're on the 1 minute. 9:30 comes up, pulls back. It's rough, but still technically kind of a thing, right? If this was like a much nicer fair value gap, or we had a liquidity sweep, right? Like let's say price came down here and shot up, and there was a decent sized, let's say like all of this was a fair value gap, that would make it an A+ setup. Okay. You don't really want to trade solely based on these. I cannot express it enough. I mean, you can take the attempts if you want, but understand they are relatively low rated setups. So let's go again to here, 9:30. Market opens. We drop lower. We come up. Damn, there's just a fair value gap right there. Tap into it. We go off. But if there wasn't a fair value gap there, you can kind of see it because we take out all of this, move higher. Right? just understanding the structure. Right here, you see we come down, we swept liquidity, come down, bam. Damn, that was nice. Was it end of day? That was. Wow. Let's go look into some last week. Why the fuck do I have that fair value gap right there? Unless that was literally what I just did. I don't even think it was. And it's these are more of just understanding this example and what we're going over right now, just understanding how price can sometimes move. So like right here, this is actually a relatively good example. We have the liquidity sweep, instant drop. So failed hoorah, you know, hammer candle, signs of weakness, but there's no real building block there. Price retraces. Excuse me, price retraces into it. You don't really get anything. There's no, you know, whatever. Maybe you start to see sellers are present. You start to see it to break down using whatever else you want to. You can try and enter it and target the liquidity. It's not ideal, okay? Really, it's just understanding the structure is what I want you guys to get out of this, out of me going over this, is the structure. Entry structure. So you want like, I'm trying to think how to word this. Impulse. I don't even know if that would be the way. Impulse move. Retracement. Continuation. Okay. These are very low setups if you don't have a liquidity sweep before the impulse move. If you don't have a building block to target for a retracement, especially if you don't have targets using liquidity or other building blocks. Okay. But understanding that structure wants to move that way can help you identify, and your eyes kind of fixate on when you see that type of move, right? Again, this does work on all time frames, which may be the damn death of me. Liquidity sweep. Let's go to the 1 hour. It might even be clearer. Ta-da. Kabam. We're taking out that fucking day low. Here's another example, all right, on the higher time frames. Some shit going on down here. There's no real liquidity sweep. We grab all of this, impulse move higher, we pull back, and you know, you got this building block, so you got one confluence, right? You have just these random kind of structure setups, right? So understanding the structure of the entry, once you use them enough, you start to see it. All right, because if I take, let's see if that's actually drawn out proportionately. It needs to be closer to this. Actually, well, it'd be a short. That's a long. Actually, no, that would work, I think, kind of. Because it was like this. What did I have it? I had like this and this. If I take this, simply drag it over, line that up. Here's this, and then here goes this. And then there's this, right? But there's no fucking fair value gap. There's no fucking liquidity sweep. There's no nothing. So, no, funny enough, look at that. That was that example from the failed hoorah. And reading the DOM and stuff. Came right out of it. So does that make sense as far as structure? Wow, this is actually really kind of annoying to watch, to be honest. Okay, cool deal. Cool deal. Yeah, really just understanding the structure. With it being personal concepts, I really don't think there's anything else I want to do or go over. I mean, I guess we can go over like AMD and stuff, and yeah, we'll do that. So accumulation, manipulation, distribution. funny enough, this is also an example. So price is accumulating in this range. Okay. We then can sometimes understand that we're going to see a manipulation. After price manipulates, it will typically distribute into the opposite way of manipulation. Accumulation, manipulation, distribution. It's pretty much what we look for on a daily basis. And why that's manipulation is because it manipulates the liquidity that was forming. I wish I remembered when an A+ setup was for a morning drive or morning whatever. So kind of, let's go Friday. I don't know if there's like 100% an example from Friday. If we count all of this as accumulation, we then can count this as manipulation because it manipulated the highs, right? It manipulated the liquidity, aka grabs London highs. And then you see distribution. Right? Sometimes it's a thing to keep in mind when you're seeing price consolidate. Let's go to the 1 hour, see if I can find a much larger example of this. I know gold low-key loves to do this. Yeah, I actually was watching this the other day. I noticed this the other day. Here's your accumulation, aka the structure. We manipulate the lows of said structure to then distribute in the opposite direction. Gold is notorious for doing this, just these types of cycles. Okay, I'm sure I can find plenty more. No manipulation there. Accumulation, not really manipulation, so right. And this isn't like anything part of a strategy, but it's sometimes just key to know what you're looking for. Let's go ES, see if I can find something here and just trash all of this anyway. Arguably, keyword, I'm sure on the 5 minute is. Oh, I might have just lost it. I think this was it. Accumulation. Or I guess, well, accumulation would be more like this. Hello, accumulation, manipulation, distribution. Okay. How you would set this up is you want to notice chop. First thing is chop. If you see price consolidating within a range, you're like, okay, cool. Price very well could be accumulating. Okay. Well, the next step is I want to probably see price get manipulated. Take out the highs of the chop. Then, once you see that, maybe form a bias that price is going to want to go in the opposite direction of manipulation, aka in this example to the downside. And it sets up accumulation, manipulation, distribution, AMD. Okay. Very common stuff. You probably have already heard of it, but it is good to know. And then there was one other thing. Oh yeah, session cycles. Shit. I don't need to open that, but I don't want. You motherfucker. Right, you could even call this all accumulation, whatever. Session cycles are other things as well. Let's go back to NQ. Okay. Very, very similar to A lot of bullshit I can see. What do you mean? Just this entire move down? Yeah. Yep. Motherfucker. Imagine losing because you're so stubborn that you think there's a short and then it happens and you're not fucking in it. Whatever. So, session cycles. I low-key do have to use this one. Because so sessions we know are London, Asia, and New York. Right? London, or Asia, London, New York. Okay. Get rid of these real quick. Sometimes you can use these sessions just like AMD paired with it. Okay. So in London, or in Asia, we had accumulation. Okay. We then had London manipulation, so we could look for a New York distribution. Now it's not always that perfect. So right here, you have, in my opinion, kind of a London manipulation, or London accumulation, all the way to like into New York. We had an Asia manipulation, so you could look for a late Asia, early London, distribution. Okay. You can kind of sometimes pair these with the settings or with the sessions, right? So New York, late New York accumulation. Well, shit, that's just AMD in general, not really based on the sessions. You could probably qualify all of this as accumulation during Asia and early London. London manipulation, i.e. like London reversal. And you could look for New York continuation. Okay, so right here, we had Asia / late Asia, early London reversal, New York potential continuation. Okay. Let me see if I can open this real quick without sharing all of my personal information with you guys to show you this example. Oh, and it just opens up. Might be in here. Let me see if I can find this real quick. Yeah. This is a rough example of it. This is from a fat minute ago. So we had manipulation into previous day candle gap. I guess there's a gap over there. I don't have enough context. Let me see if I have multiple screenshots of this. Oh, it's breaking up the trade. Come down. We have the reversal, right? This would be like a 1 hour, 4 hour liquidity sweep, probably on this candle. Maybe an entry somewhere in here. We look for continuation into, Asia, maybe London, up into session highs. Right. You can use the different sessions to form a bias based on, close all this back up and put it back. To form some type of bias, right? So right here, New York reversal, maybe Asia continuation, London continuation. Is the yellow just the overlap between Asia and London? The orange, I would say. So yeah, this right here. This is the overlap between the two. Just like New York and London overlap. So they're the overlapping between the sessions. Asia opens and New York closes it. Yeah. Does that make some sense though, as far as like session cycles and AMD and stuff? Not gonna lie, watching this market fall is relatively annoying since this has been my target all day long. Some accumulation doesn't look like accumulation if it's not for the big distribution I have it out there. Yeah, I will say that. Let's go find an example of it like barely working. And you're primarily just looking for chop. Like right here. I mean, I got an idea. I don't want to cheat, but I want to see if we can actually do this. Because you have a very valid point, right? And hindsight's always 2020. So, random bar. I have, wow, we are way down here. Looking for some chop to happen. I would call that chop. Accumulation, hypothetically. Arguably manipulations right there. So if this is true, truly an example, and I will probably be wrong on this. So you just get in somewhere right here, hypothetically. So it needed more manipulation. It needed to manipulate all of this. Let's see if we can do it again. I'm going to consider this chop. I'm just curious now to see if this will actually work. I mean, technically, yeah, that's manipulation. But looking at this, I don't really think this is going to end up falling. No. So, yeah. I mean, hindsight's always 2020. But in this price action down here, it absolutely sucks. Hold on. Wait. Hold your horses. Might have just set up perfectly. I mean, it kind of works. Right. I want to see like some primary chop BS. Is it? I thought it wasn't pausing. Okay, so right here, I mean, it's up to you if you want to consider this accumulation. It's not. I don't really want to consider that accumulation, in my opinion. But if it is, then this should fall. Take out the lows. So, I mean, it's up to you if you want to think this is full of it or not. Dude, what's up with price action? Like, we're in the fucking NASDAQ 1000. Oh, look, accumulation, potential manipulation. This might go higher. No, it does not. All right, let's see if we can get some actual chop here. Maybe. This is a stretch and a half. If that's accumulation, this is manipulation. Definitely not. Time frame on 1? No, all right, that's funny. I want to see some nasty chop. Like stuff that'd be like, this is pure BS. Let's see, hold on, I'm gonna play it a little more. I'm gonna say this could be, and then you'd look for it to drop probably. Oh, we already took it out. Never mind. No idea if this is gonna work or not. I guess I kind of feel like we're gonna get another red candle down, pretty big one whenever this market technically opens. And let's see if we get a launch out of this. Not really. Didn't even manipulate those highs. Actually, wait, did we? Barely. I don't know if I'd actually call that manipulation. So, I don't know. ABC. I mean, looking at it without any context, just solely looking for chop. Like, I don't even know where I am. Let's go random bar again. Hit me. Give me some new price action. 5,000 on the NASDAQ. In 2019, 2017, we were, holy shit, this market has gone high. Very nice trend. Very nice, very nice. If we can bounce these lows, I would call this chop. So accumulation, manipulation. What time frame is this? Or what time? 6 a.m. So London, late London manipulation, late New York continuation. I don't even know if I can go to the 15-minute chart. My guess, low key, pure guess. I can't even get any context. Just market closes. So, what do you guys? I'm only looking short too. I didn't even find a single manipulation bullish. This is the last example because my brain's fried. Let me grab these lows. Oh, there we go. So potential manipulation. Damn, we just continued it. Look here. All right, new chop range. Like I'm still considering all of this chop for this example. This is stupid. So up to you if you guys want to use it or not. It's more of just a tool to have in your tool belt. What a bounce off 619. What a damn bounce. Am I signing up paper trading? I'm not. Maybe I should just go take this with the real money. Because this is gonna work. There's that annoying ass noise. Let me look at SPY real quick. That's low-key a lot of risk. Are those the same time frame? They are. Let me look at Qs. I need it in the stream, low-key. Push and pull right. Stuck under, potentially stuck under SPY. Stuck above on NASDAQ. Idea, wait for the breakout, right? If you want to go short, wait for 618 to break. If you want to go long, wait for this to break and retest, right? Just reiterating points. Clearly though, low key, I do want to. Yeah, I'll do that after the call. Cool. If you guys have questions, DM me, tag me, comment. I don't care. I'll do my best to get them answered. And then tomorrow we have putting it all together. So very, very, very important day. And I will absolutely need as many of you guys to make it as possible. So we'll figure that out. Cool deal. Cool deal. Appreciate you guys.